Hi everyone, Ken Shreve here with a look at what's coming up this week in terms of economic data and earnings reports. It's a relatively quiet week of economic data, starting with the release of the Fed minutes from the June 20th meeting on Wednesday. The Fed extended Operation Twist to the end of the year, where it sells short-term securities and buys longer-term debt to reduce borrowing costs and spur the economy. The bias at this point seems to be toward more easing, especially after another weak jobs report on Friday, where the economy created a scant 80,000 jobs. On Thursday, watch for weekly jobless claims data. Last week, claims fell 14,000 to 374,000, more than expected and the lowest level in 6 weeks. Finally, on Friday, the latest reading on wholesale inflation will be out with the release of the Producer Price Index. Producer prices fell 1% in May after declining 0.2% in April. Excluding food and energy, the core rate increased 0.2% for the second straight month. The decline in producer prices was driven by a third straight monthly drop in energy prices. Energy prices fell 4.3%, the largest decline since March 2009. Gasoline prices fell 8.9%. It's still slow on the earnings front this week, but that'll change soon. On Monday, Alcoa kicks off earnings season. The aluminum giant will get a lot of attention, but it's not that relevant a stock anymore at 46% off its recent high. Earnings are expected to come in at 6 cents a share, down 81% from a year ago. Sales are seen falling 11% to $5.8 billion. Two words best describe business at Alcoa these days: weak demand. On Tuesday, watch for earnings from little-known Helen of Troy. The company makes and distributes brand-name consumer products, primarily in the U.S. and Canada, as well as Europe, Asia, and Latin America. It operates in 3 segments: personal care, housewares, and healthcare home environment. Quarterly profit is expected to come in at 86 cents a share, up 10% from a year ago, with sales up 10% to $299 million. Finally, on Friday, 2 high-profile financials will report: JP Morgan Chase and Wells Fargo. Wells Fargo looks a lot better than JP Morgan Chase at this point. It's only about 5% from a 52-week high, while JP Morgan Chase remains in a downtrend, about 26% off its recent high. Thanks for watching. I'll see you back here 1 week from today with another look at the week ahead.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to